Hi dear friend, today we have new topic. Today topic is the inflation. The economy topic is vital for the UPSC exam. Let us discuss about the inflation. Inflation means a fall of purchasing power of money over a period of time. We can define in other way, too much cash in the market is also known as inflation. Then we have another term is creeping inflation. Creeping inflation occurs when the inflation rate is in the range of 1% to 5%. Such inflation erode the purchasing powers of money, but it refers to as a manageable and sometimes inevitable is a growing economy. Then we have another term is the tottering inflation. When the inflation in range of 5 to 10%, which is not controlled properly, may lead to the galloping inflation at the rate of 10 to 20% annually. The galloping inflation may worsen into the runaway inflation too. Then the another term is the hyperinflation. Inflation is out of control, means too much cash in the market. It degrades the value of the money. Then types of inflation. First is the demand pull inflation. Demand pull inflation caused by the increase in the demands, and when the demands is in the economy outgrow the supply in the economy. Too much money chasing too few goods is known as demand pull inflation. Then another type is the cost push inflation. It is also referred to as a supply stock inflation, which inflation occurs due to reduced supply because increase the price of inputs. Then we have structural inflation, also known as bottleneck inflation. Such an inflation is built into the economic system due to the governmental policy. Such inflation occurs from the time to time because of the weather and seasonal conditions or due to supply side contain leading the shortage of supply in goods and services. Then another type is the stagflation. Stagflation refers the situation in an economy when inflation and unemployment both are high level. That means a combination of high inflation and low growth rate is known as stagflation. Then we have another is deflation. It is nothing but the completely opposite of inflation, as there is a fall in the general price levels in the economy over a period of time. Inflation rate falls below than 0%. Then the another term is the recession. Characterized by the negative growth rate of GDP each two successive quarter is known as the recession. Then cause of the inflations. Demand pull inflation. Increased by the government expenditure, putting large money in the hands of public, thereby putting to the effort too much money chasing too few goods. It rising due to the rising population, due to the black money, due to changing competition patterns, sharp increase in demand of a certain goods item that people eat more frequently as income rise. For example, pulses, egg, fish, and poultry were apparently driven up their price in the economy. Then the increased wage. If wages are increased, the demand will increase. Then another is the cost push factor. Rise in the wage, increase in the indirect taxes, increase in the administrative prices. MSP for the food grains, petroleum product, etc. also led to the inflation as they have huge share in budgets of common citizens. Then the infrastructural bottlenecks, lack of the proper roads, electricity, water, etc. rise per unit cost of production. Then the fluctuation due to the seasonal and cyclic regions. Then some are the miscellaneous factor of rising of the inflation. Rise in the price of the international commodities such as edible oil, crude oil, etc. The huge number of the middlemen and large amount of money is spent of the profit by them. Then another is the centralization policy as adopted by some of the traders in the Indian economy, thereby harming the interest of the consumers. Then another miscellaneous is huge dependency on the import of crude oil for meeting the energy demand of the economy. Then is prolonged industrial unrest, which result the reduction of the production capacity. Then what are the impact of the inflations? Some impact of the inflation are recession in some of the sectors, adversely impact on the wages earners, creators create distortion in the particular patterns, impact growth and availability of the credit and industry, impact in export, impact in import, adverse effect on foreign exchange, discourage savings, credit and equal distribution of income, breed corruptions. It encourages practice such as black marketing, hoarding, etc. Increase the fiscal deficits. Then the measure to curb inflation and their limitation due to the monetary policy. Monetary policy help to the curb the inflation. First, the RBI may fight monetary policy to cool down the demand pool. For example, increase bank rate, repo rate, etc. to curb the supply of the money in the market. R- then second, RBI use rising margins on loans for the commodity for which traders have a tendency to speculate and hoard. Third, RBI may also resort to the other operations such as open market operations to map out the liquidity from the markets by selling government security and bonds. Then another is the fiscal measure, cut down its own spending on various scheme, project, etc. It can increase the tax either direct or indirect. Then the administrative measure to curb down the inflation is banning the export of the creations items such as edible oils, onion, and pulses, imposing a temporary on tradings on features in some of the essential commodity, reduce the leakages. Government also need to ensure raiding of the warehouses of essential commodity to cut out the household stocks with a orders. Then how to measure the inflations? Based on the periods, annual average inflation rate, point to point inflation rate. Then another major inflation is the GDP defaulters. This is the ratio between GDP and current price and GDP at the constant prices. GDP at current price is equal to GDP at constant price. GDP defaulter will be 1. Then the wholesale price index WPI. Inflation calculated on the basis of WPI is also called as headline inflation. WPI will contain to constitute three major groups, namely primary articles, fuel and power, and manufactured product. Limitations of the WPI wholesale price index. It does not include service such as health, education, transport, finance, etc. WPI does not account for a product of the unorganized sectors in India, which account for more than 30% of manufactured output of the Indian economy. Third, since the collection of price is on voluntary basis, it flow of the price data especially for manufacturing units because irregular leadings to the problem in the compliance of the WPI. Fourth, it reflects price movement. It wholesale levels, thereby not reflecting the retail price at which price goods are bought by the final consumer. Then, importance of WPI. Monitor the dynamic movement of prices. It helps design trade, fiscals, and other economic policies. WPI also business context. It is used to calculate price escalation causes in the supply of raw materials, machinery and construction work. Then fourth is the consumer price index. Core inflation calculated the price of all goods and services. It is the economic excluding and energy and the food items. Such as measure does not include the volatile items, which may distort the true pictures of inflation in the economy. And thank you so much.